Hi, welcome to CapexForexTrading.com. In this video, we're going to discuss the main difference between technical trading and fundamental trading. So technical trading is purely based on chart analysis. The reason for this is because charts are viewed as graphical representation of human behavior. So by simply looking at one of your charts, you are able to see how the world reacts at various times of the day. Now, in terms of strategies employed in this trading style, you only need to concern yourself with chart patterns, otherwise known as setups. Now, we're going to record many videos about chart patterns or setups, and we're also going to teach you how to identify them, trade them, and when to exit. But in terms of example, what we've got here is a simple technical trade. So in this area here, we have a consolidation, which is defined by the top trend line and the bottom trend line. They make a sort of a wedge or a triangle pattern, but the trade that we're looking for is a break of this bottom trend line here in the downwards direction, and that's exactly what's happened there. Now please don't trade this if you spot this at this stage, because there is a lot more that we need to teach you in terms of trading this pattern. This is purely for example purposes. Now, fundamental trading is slightly different. It is purely based on news or data. It is not concerned with any chart patterns or anything like that. In fact, a lot of fundamental traders don't even look at charts. They simply wait for news or data to be released on a daily, weekly or monthly basis. Now, in terms of the type of data that we're looking for example, on a monthly basis, we're looking for the non-farm payroll numbers from the United States, which is the biggest monthly number. Now, even if you're a technical trader, you should stay away at the time that this data comes out, because it has the power to shoot drastically up or down. Now, on a more weekly basis, we're looking for data such as the US unemployment numbers, which is released from the US on a weekly basis. So these numbers obviously can make the charts go up or down. So if you are a technical trader and you are in a very small time frame, you should also stay away from trading these numbers. But if you're trading in time frames 4 hours or above, then you should be fine to stay in that trade. So in terms of example, what we've got here is a 1 minute chart. Now, the reason why I've circled is because this is quite a high drop down. That's quite a big black candle in the market, and in a 1 minute chart, that's quite rarely seen. So this means that some news has been released at this point. It stopped the current uptrend going up, and it's reversed back down very, very sharply. Okay, so this is an example of a fundamental trade when news has came out of either the US or some other country. So for now, that's all you need to know in terms of our examples, and we shall see you for the next video. Thanks. Hi, welcome to CapexForexTrading.com. In this video, we're going to discuss the very basics of what the Forex market actually is. So in simple terms, Forex stands for foreign exchange, and it is simply a place where traders from around the world go in order to buy or sell currencies from various countries. Now, whilst this idea of buying or selling currencies might sound strange at first, the actual execution itself is very simple. The reason for this is because all it involves is buying or selling of currency A against currency B. Now, we're going to make many more videos about this subject the further we progress throughout our Forex trading course to ensure that you understand this fully, so don't worry. Now, in terms of size, the Forex market is by far the biggest trading environment in the world, with over 5.3 trillion US dollars being traded per day. The reason for its size is because it involves big players like international banks, hedge funds, and central banks who have very, very high budgets for trading in the Forex market. Now, traders like you and I are very small players in this market, so we do not have the ability to move the market in any direction. Now, there are many currencies that are available to trade with in the Forex market, but there is also a list of 7 major currencies that you should bear in mind when you trade. They are the US dollar, the euro, the Great British pound, the Japanese yen, the Swiss franc, the Australian dollar, and the Canadian dollar. The reason why these are called major currencies is because they are the ones that provide the most volume in the market on a daily basis. Now, bearing this in mind, there is also a list of the top 5 most traded currency pairs. They are the Euro USD, the pound USD, the USD CAD, the USD Swiss franc, and the Aussie dollar against USD. So there are also many other currency pairs that you are available or you can trade with, but these are the top 5 most traded currency pairs in terms of volume. So when you first begin to trade, these really should be the ones that you should place on your chart, because they're the ones that are going to provide most volatility and the most realistic market conditions. So in terms of the very basics, that is literally what the Forex market is all about. So we will see you for the next video. Thanks.